Hey, how's it going? Seth here. Today I'm going to talk about a pretty hot topic in land investing, and that is how you can choose a market. So basically looking at all the different data out there to figure out, is this a market where I should be working in? Is it going to be easy to find properties to buy? Is it going to be easy to sell my properties once I own them? How many opportunities will there be out there? So why is it important to choose a good market based on what the data says? Why are we even doing this? Well, it's because we want to find markets where there will be enough opportunities to buy. And it also won't take forever to sell these properties. There are many markets where there's a big imbalance in one direction or the other, meaning it's either really easy to buy but then hard to sell, or it's kind of hard to buy and then super easy to sell once you can actually find those properties. But we want to find that sweet spot where it's not terribly difficult in either direction. So don't get me wrong, all right? There are deals everywhere. But if you can intentionally buy in areas that will not only sell faster, but there will also be enough deals available to choose from, this can give you a pretty good competitive advantage and make your life a lot easier on both sides of your land business. And as a side note, you can also have a competitive advantage if you're working in an area where you just happen to know things that others don't. Whether it's about the culture in that area or about economic changes on the horizon, this can happen in places where you've lived or worked. But if you're going into an area blind, the stuff I'm going to show you here will help you be a lot less blind just by looking at the numbers in a way that will help you draw some conclusions. So I'll tell you right now, the few methods I'm going to show you are not perfect because the data we have available oftentimes isn't perfect, but this is the best we can do with the information we have. So how do we start this? Well, back when I got started, this was a very simple process, and you can actually still do this today if you want. If you have no idea where to start, and if you don't want to pick a random spot on the globe, at a bare minimum, I would do this. First of all, find a few counties that are 1 to 2 hours from a major metropolitan area in a state where people are moving to. Think of like the capital of any state or the biggest 1, 2, or 3 cities in any given state. And we're not going to start looking for land in the county where that city is. We're going to figure out which counties are surrounding that city, anywhere from a 1 to 2, maybe even a 3-hour drive from that big city. We want the property to be close enough that people who live in that big city can drive to it. It could sort of be like a home away from home or a place where they could put their cottage or even live out there and commute into the big city. But we don't want it so far away from civilization that it's just inaccessible and really hard to get to. That 1 to 2 to 3 hours driving distance from a big city is kind of that sweet spot we're looking for. And again, we don't want to just do this in any state. You want to find the states where people are moving to them. How do we figure out which states people are actually moving to? It's actually super simple. I'll show you right here with this map. So this is a map I discovered a couple years ago from North American Moving Services, and it's pretty basic, and that's part of what makes it so beautiful. So as you can see here, you can go year by year, and it's going to tell you in big, obvious red or blue colors which states have the most people moving to it and which states have the most people moving away from it. So red means people are moving away, blue means people are moving to. But you'll notice a lot of gray states as well, and those states fall on one side or the other as well. So we can go hover over like Michigan, for example, and if we click on it, we see that in 2023, there was a total inbound of 47% and a total outbound of 53%. But this is definitely a state where people are migrating away from it relative to all the other states. Or if we click on any other state, you'll see the exact same thing. Minnesota, people are leaving Minnesota. North Dakota, it's pretty well balanced, but there's just slightly more people moving to this state than leaving this state. And if we go down here to Florida, this is another one where people are moving to it. And the cool thing is you can even go back year to year and see the differences. So if we go ahead and go to 2022, we can see it changes a little bit. In 2021, changes again. 2020, 2019, 2018, and just kind of helps you see the trend of where people are historically coming and going from. And this isn't the only way to find this information. Say if you're watching this in the future and this map ever disappears for some reason, you could always just go to Google and search for population growth by state, and you'll find some really helpful results there, like this one from census.gov that shows a similar map. So this information is not difficult to get. I just like how easy and intuitive this migration map is here. So I'll be sure to include a link to this beneath this video if you want to check it out for yourself. So there you go. That's a simple way, and this will usually point you in the right general direction. And this is really all I did when I got started. In fact, I don't even think I looked at which states were growing. I just found those metropolitan areas and went 1 to 2 to 3 hours outside of them. I spent the first few years of my land investing business focusing just just on Michigan. And in hindsight, it's crystal clear to me why it generally took a longer time for me to sell my properties that were in Michigan. Because first of all, I mean, the economy was terrible at the time, but also historically speaking, if you look back at these years, I mean, people are pretty much always leaving Michigan. If I were to have done this in Florida or Arizona or one of these states that's consistently blue, I probably would have had a better time. And keep in mind, I was always able to sell my properties in Michigan. It's not like I couldn't do business there. I was still able to make a great business. But the point I'm making is this is enough information to at least point you in the right general direction. Now, let's get into this a little bit further and use some actual data from more sources and start doing some math and crunching some numbers. So I actually like to use a couple different websites side by side when I'm doing this, just to make sure I'm getting a consistent, clear look at each market that I'm looking in. So I use Zillow and I use Redfin. So all I have to do is pick a few different markets that we want to work in. And I will say, before you get too far along in this process, it helps a lot if you can be pretty clear about the sizes of properties you want to go after, or even the value ranges of properties you want to go after, because the more you can narrow and refine your search before you even start doing this, the clearer picture you're going to get about which markets you should be working in. And I'll explain it in just a second. So let's start here on Zillow, and we're going to go look in Polk County, Florida. And what we're looking for here is something called the sold to for sale ratio. And just so you know, this is nothing I made up. This is something that I've seen a lot of other land investors do, and for good reason. It'll give us a pretty good idea for how many properties are selling in that given market and how many of them are for sale, and we're going to get a ratio from that. And some things just to be aware of before we even get too far in this is when we're looking at Zillow, we're only looking at Zillow, okay? This doesn't tell us anything about the properties that might have sold on Facebook Marketplace or Craigslist or land.com and the for sale by owner section. So this does not look at everything. And that's part of the reason why I do this on a couple different websites, just to kind of compare and contrast them, make sure they're not too far apart. But generally, if I can only do this one place, I would do it with Zillow, because I just kind of find it the easiest one to work with. So we're going to go to Zillow and we're going to go to Polk County, and we're looking for two numbers, essentially. We're looking for the number of vacant lots that are currently listed for sale. And we're also looking for the number of vacant lots that have sold on Zillow. So in order to see the number of vacant lots for sale, we're obviously going to make sure this is set at for sale. And over here for home type, we're going to deselect all and only select lots and vacant land. And we'll click apply there. Here under more, it's up to you whether or not you want to leave coming soon in there, but I would just suggest if you do leave these in there, make sure you're doing it as well on the other platform that you're using. In this case, it'll be Redfin. So I'll show you how that works. So we're going to go down here, and for days on Zillow, all we're looking at right now is how many properties are for sale right now. It doesn't really matter how many days all these properties have been on Zillow. We just want to see the snapshot of what does it look like today. So we're going to say any, and if we look right here, it shows 500 results, but it's like, wait, that's really too perfect of a number. Exactly 500, really? If you look over here, it says actually it's 500 of 1,241. So that 1241 number is the one we're going to use, because that's everything. That's in Polk County. That's vacant land. So we're going to go over here to this spreadsheet I put together. And by the way, you can download a copy of this spreadsheet if you want. I'll make it available here. And we're going to type in the state right here and the county. And under for sale, we're going to say 1241. And now when we want to see the sold over the past 12 months, we go back here and we're going to change this to sold, and then go down here and change this to the past 12 months. And apply that. And now it's showing us 1,938 results. We'll go ahead and put that here, 1938. Boom. There you go. So that's what it's showing us right here on Zillow. Now let's try the exact same thing here on Redfin. We'll say Polk County, Florida. And to find the for sale number, we're going to make sure we go over here to the home type and select land. And then we're going to say for sale. And we're going to include the coming soon and active, just because that was what we did on Zillow as well. And we're seeing 1,209. So it's almost never going to be exactly the same, but it shouldn't be too far off. 1209, and then we'll switch this to sold over the past 1 year, and we've got 2,106, 2106. And how do we make sense of what these ratios even mean? Like, what does this tell us? Essentially, if we were looking for a market with perfect balance, where the for sale and sold are the exact same thing, we would see one. That's perfect balance, where for every property that is listed, one property is sold. There you go. But if we're seeing it at 1.74, for example, it's showing us that looking back over the past year, more properties have been sold than are listed right now. And if that number was less than 1, it would say that over the past year, less properties have been sold than are listed right now. And this just kind of gives us an indication for how hot the market is. Are properties selling faster than they are listed or slower than they are listed? And, if you saw this at like 0.25, that would imply, wow, properties really aren't selling that fast relative to how many properties are listed. Or if this ratio was 6.0 or 8.0, it would be like, holy cow, these properties are selling so fast. This is a super hot market. It might be pretty hard to find deals here, given how fast properties are selling. Usually what I'm looking for is no less than 0.75 and then no more than 1.5. And there's nothing magical about these numbers. Like it could go up to 2 and that's probably fine, or it could go down to 0.5 and that's probably fine too. This is not a perfect metric. It doesn't look at all the data out there. We're only looking at Zillow. We're only looking at the MLS data for the most part. Zillow does have some for sale by owner data, but usually not a whole lot. And even if you did find that, that's not a representation of everything that's out there. But it's something to go by and some clue as to how fast things are going. And given that Redfin has given us a fairly close number, we can say, yeah, that's probably pretty accurate. Now, do you remember a few minutes ago when I said it's helpful if you can know before you even start doing this, the size ranges or like the value ranges of the properties you're looking for? I'm going to show you why that's important. Because right now, when we have all the acreages in there, we're looking at literally everything. And if you're going into a market and you know you're never going to buy a property that's over 40 acres, or you're never going to mess around with properties that are less than 1 acre in size, or whatever it happens to be, if you can put any clarity on exactly the size ranges or the value ranges of the properties that you're trying to go after, now is the time to feed that stuff into Zillow so it can give you a clearer picture of what the market looks like with regards to those kinds of properties. Not everything, but the properties that you know you're trying to go after. Because if you just do this and you know that you actually have a pretty narrow box for what you're willing to buy, then this could mislead you, or at least give you information that's not relevant to the decision that you have to make about which market to go in. So let's say, for example, I know I'm only going to go after properties that are between 5 and 20 acres. Now let's put that in Zillow and see how different the numbers come out. So we'll go back to Zillow here, Polk County, Florida. We're still looking at the sold comps over the past 12 months. And down here where it says lot size, so we're going to say 5 to 20 acres and apply this. Now we've got some very different numbers. We have 154 sold properties. So let's go back over here, do the exact same stuff here, but this time we're going to say 5 to 20 acres. And for sold, we've got 154 there on Zillow. And if we go back up here to for sale, apply that. We're going to go down here and we're going to set this to any instead of 12 months because that does change the number, usually just a little bit, and that's 93. So we'll put 93 in there. And you can see it looks like the ratio is pretty close to what it was already in the first place, but it is a little bit different. And sometimes, depending on the county and the property types there, this could change it a lot to the point where it would make you not pursue that county otherwise. Or maybe you would pursue that county, whereas you otherwise wouldn't if you're looking at everything. So again, the more clear you can be about what you're looking for, the better. If I wanted to filter this by values, I could do it here as well with the minimum and maximum price. Of course, vacant land is kind of a tricky type of property to value, so it may not be that accurate or reliable of a filter to use, but still, it's there if you wanted to. And again, over here in Redfin, we could do pretty much the same thing just by clicking over here to these filters. We're going to change the lot size from 5 to 20 acres. And we've got 141 here that are sold over the past year. And then when we switch this to for sale, we've got 102. All right, now similarly, it's not quite the same as Zillow, but it's not that far off, and it looks like it bumps us a little bit more into the range that I would personally want to see of that 0.75 to 1.5 range. So now that we understand how we can do this in one county, I'm going to find like 5 to 10 of them that I think might be interesting to work in, and I'm going to run these numbers for all of them. I'm not going to make you watch all that. I'm just going to quick do it, then I'll pick this back up so you can see how the ratios came out and how we can use that information to kind of make a decision on which counties might make the most sense to work in. Okay, so I just went to 5 more random states and counties and put their numbers in here. And I actually did not sort it by acreage size ranges. I probably would want to do that if I was doing this for real. But just to show you the ratios and how they come out different from one market to another, you can kind of see here, it looks like Alamosa County, Colorado. Those ratios are pretty much right in line to what we would want to see, although it's a little bit slower on the selling side. Denton County, Texas, that looks pretty balanced based on this. And then in Kent County, Michigan, that's where I live. It looks like that's sitting at a little bit over that 1.5 range, not too bad, but it's definitely over that. And then San Bernardino County, California, there's a ton of transactions going on there. And the ratios are actually somewhat far apart. Not terrible, but definitely not the same. And then over here in Yavapai County, Arizona, this is looking like a pretty balanced county as well. Now, this is not everything you want to look at, all right? These ratios certainly matter, but they don't tell you the whole story. There's a lot of other little hidden clues you can look at in Zillow to kind of give you an idea for how many properties are selling, how long are these properties sitting on the market before they finally do sell, and of the properties that are listed, are they getting lots of views or favorites? Like, are people actually interacting with this stuff, or are people just posting these things and they never really get looked at? This is where you get into a lot of nuance that can kind of steer your decision in one direction or another based on some of the finer details you see if you go so far as to look at this stuff. For example, let's go over here to Polk County, that first county we were looking at, and we can go ahead and click through any one of these properties. And when we scroll down this listing, we can see some interesting pieces of information. First of all, it looks like this has been on Zillow for 312 days. That's almost a year. So this thing has been sitting out there for a while at this price. It's been viewed 185 times and it's been saved 17 times. So this is just giving us an idea for, I guess, first of all, how long it's been sitting there without being sold, and also how many people were so interested that they decided to save that thing. Now, by contrast, when we go over here to Kent County, and by the way, we can actually see the days on Zillow just right here on the listings without even clicking through to them. But if we click through one of these things, we can see the same thing on this Michigan property. It looks like this one's been seen, wow, 1,746 times. That's a lot. And then 149 saves. So what that's telling us isn't any really conclusive things about the entire market, but it is telling us if you were going to go after a property like this, say if you're looking for properties in that value range or that acre range in this market or that section of the county, and you posted it, you could probably expect about this amount of views and saves. That's what kind of interest there is for those kinds of properties in this market. Again, going back to understanding exactly what kinds of properties you're going after in the first place, the clearer you can be about that, the better conclusions you can draw from this process, because you can look at this stuff and understand, is this actually similar to what I'm planning to do, or is this not really an appropriate comp? Are we making an apples to apples comparison or an apples to oranges comparison? So when I'm getting more and more serious about working in a county, I would click through, I don't know, maybe 8 or 10 or 12 of these things just to get a feel for, any trends I might be seeing in terms of how many views, how many saves, how long these things have been on the market, if they're selling quickly or not. And you can actually even filter this thing by days on the market too, if you want to, just in case you're interested in that. If you go to more and then scroll down to days on Zillow and specify how many days on the market you want to have on there, you could see it that way too. And also another thing to keep in mind is that if you want to go into a market and do business again and again and again using the same licensed agents there and the same title companies and same attorneys and same drone photographers and surveyors and on it goes, it helps to pick a county where there's a lot of transactions going on there on an ongoing basis. You can certainly work in any market and find one deal, and that's great for that one deal. But if you want to actually build a business around 1 or 2 or 3 or 10 markets, it helps to work in markets where there's a lot of stuff repeatedly happening there. For example, if I was looking in a county like Kent County, Michigan, and I'm seeing that, there's 30 results here for the for sale properties. And then on the sold end, what do we have here? We got 40 results. So the ratio may be in a good place, but if that's like the total number of sales that are happening of this property size and type in this county per year, that's not a very big pot to choose from. I mean, there's certainly opportunity here, I'm sure of it, but it's just kind of a small pond to be swimming in. Maybe if you focused on like Kent County and all the surrounding counties, maybe you could find some stuff to work that way. But by contrast, if we look over here in a massive county like San Bernardino County, which by the way is one of the biggest counties in the country, then no matter how we sort this thing, it's going to have a lot more transactions going on. So if we go sold, and then we've got this filtered by vacant land, 5 to 20 acres, sold in the past 12 months. So this is giving us 782 results. That's a lot more to choose from. Now, this is not an apples to apples comparison to Kent County, Michigan, because again, San Bernardino is a huge county. So of course it's going to have a lot more transactions. You can't really make a fair comparison to that versus a much smaller county over on the eastern part of the country. So you got to keep that in mind as well. If you are going to try to do the same kind of thing, I mean, just figure out the land surface area. How many counties would it take in a state like Michigan to equal the same land surface area as one of these massive counties in California? So it's just one thing to consider. And if you are trying to build up a team around a certain market, combining multiple small counties is very doable. A lot of title companies are going to work throughout that entire state, or at least a section of the state. Similar thing for attorneys and real estate agents. It's not like it has to be in their city for them to consider doing business. That certainly helps, but if you got an area that's more spread out, a lot of them can accommodate you and move around like that if they need to. Now, one last thing I want to show you. Let's say you're looking in California or Florida or Arizona or wherever, and you're trying to get an idea for where are the most transactions happening in this state, like which county or counties has the most activity. Well, in Zillow, you can actually search by the entire state if you want. So let's go ahead and do that. And we're just going to type in CA for the entire state. We can zoom in a little bit and you can kind of get an idea for where a lot of these clusters are. Looks like there's a lot right here. And there's quite a few happening right there. Looks like there's some clusters here and there. And by the way, I don't think this is even showing us everything because it's like so much data to look at. So again, if you can narrow this down even more, it'll give you a more accurate look. Like say if we just wanted 5 to 10 acres, and you'll notice those clusters get even clearer. And this doesn't really show us where the county lines are. So it's not abundantly clear, which counties all of these clusters live inside, but it's not that hard to just Google a county map of California or whatever state you're looking in and kind of overlay that over this and just eyeball it and figure out, oh, okay, that big cluster is in Los Angeles County or Riverside County or Kern County or wherever it is. And that's just one little clue you can use to try to figure out which places have the most transactions going on. Again, just let me reiterate, there are deals everywhere, all right? I don't want to imply that you have to look at everything through these filters and you're only allowed to go after these markets where all the stars and planets align. That's not what I mean at all. Again, you don't even have to do all this research and you could still be totally fine. Or you could even throw this out altogether and intentionally go after the counties where the numbers do not really line up with this and almost point you away from that, because guess what? If everybody else is using these same metrics, maybe those places will be less crowded and there will be more unique opportunities that nobody else knows about. I don't know. It's up to you. You're not really going to know until you start looking. And that's the last thing I'll leave you with, is that you can go nuts crunching numbers and trying to find every possible piece of data. There's actually a lot of other things I looked at as I was preparing for this video, like comparing the number of properties that were bought and sold over the past 18 months with the total number of vacant lots specifically in that county and a lot of other stuff beyond that. But what I found was the more granular I got, the more potential there was to kind of skew the numbers and screw things up, because every single time you do that, you're making a lot of assumptions about what matters to land flippers and what prices they're going to be offering and what their strategy is, and that they're not going to be subdividing it or improving it at all. There's all kinds of unspoken assumptions built into these calculations. And the truth is, I don't know what you're going to do with this. I mean, maybe it makes a lot of sense for you to offer a lot more than most land flippers would, or a lot less. I don't know. But the only way to really know what's going to happen with the results is to start taking action and doing it. But before you start taking action, I hope you found this helpful just as a few tests you can run your potential markets through to try to figure out, am I on the right track or am I totally barking up the wrong tree? Thanks for watching. Hope you found this super helpful, and I'll talk to you again soon.